Bob, I've been reading about investment strategies and I came across something called dollar cost averaging. Can you explain what that is?
Sure, Alice. Dollar cost averaging, or DCA, is an investment technique where you divide up the total amount of money you want to invest and spread it out over time. Investing a fixed amount at regular intervals, say monthly or weekly, regardless of the market's performance.
Oh, so it's like instead of putting all your money into the market at once, you do it bit by bit.
Exactly. Imagine you decide to invest $12,000 in a stock or fund. Instead of buying $12,000 worth all at once, you could invest $1,000 each month for a year. This way, you buy more shares when prices are low and fewer when prices are high, which can reduce the average cost per share over time.
That sounds like it takes some of the guesswork out of investing. But isn't there a chance you could miss out if the market just keeps going up?
That's a valid concern. If the market is in a strong uptrend, you might buy in at higher prices over time. However, DCA helps mitigate the risk of investing a lump sum right before a market drop. It's about reducing the impact of volatility.
So it's kind of like a safety net for your investments.
Yeah, pretty much. It's a strategy favored by those who want to avoid trying to time the market, which is notoriously hard. DCA promotes discipline and can be less stressful since you're not reacting to daily market fluctuations.
How do you decide on the amount and frequency to invest?
That depends on your financial situation and investment goals. You might choose to invest a portion of your paycheck each month or whatever amount you can comfortably commit to. The key is consistency.
Does this work for all types of investments?
It can be applied to stocks, mutual funds, ETFs, or any investment where you can buy more shares over time. However, it's particularly useful for those who are saving for long-term goals like retirement, where you're not planning to withdraw the money soon.
This all makes sense. It feels like a strategy that could keep me from making big mistakes due to panic or greed.
Exactly. It's about playing the long game. It doesn't eliminate risk, but it can make the investing journey smoother and more manageable.
Thanks, Bob. I think I'm going to look into setting up a DCA plan for my investments.
That's a smart move, Alice. Remember, it's all about consistency and patience. Good luck.